Good afternoon, everybody, and welcome to our YouTube live channel. My name is Glenn Tompkins, Senior Instructor here at VectorVest. We got a special presentation outside of Trending Thursday today as part of our Financial Independence Month, where we have a guest here that's going to help us better understand options and answer some of our basic options questions. So hopefully you guys came prepared to ask Ron Wheeler your questions about options. So this is going to be a cool thing. You guys wanted more of that, and so we're going to make it happen. If you can hear me, by all means, please respond in the affirmative, preferably with VV Nation, to let me know that I am coming across loud and clear on our special off day on our YouTube live channel. So if you can hear me, and we are streaming both on YouTube and on Facebook. So, Joey, can I see the chat on Facebook? No, I can't. Okay, I can only see the chat here on YouTube. Hopefully, I think we've got somebody in the background on Facebook to answer any of the questions or bring those to my attention somehow. I wonder if John Marabu is on the Facebook side. It's Clay. So somehow Clay can get the questions that are coming across from Facebook over to me here on YouTube. So we are doing a dual stream today. All right. Oh, you got, who did you get me? That's the Facebook stream, but I can't see the chat, right? All right. Well, hopefully I get to see the chat on both. And if I do, we're going to do the best that we can to get the questions answered on both sides. So once again, our YouTube channel live. My name is Glenn Tompkins, Senior Instructor here. I've been with VectorVest now for 17 years, and so this is what we do, and this is impromptu, but I think it was well needed. If you're brand new to the channel, please subscribe to the channel, whether it's this live stream channel or our other VectorVest channel. Please subscribe to both of them. Hit the bell icon, because when things like this happen out of the blue, you will be alerted when it happens. All right, so that's why it's important to hit the bell icon. And if you like the content, please hit the like button. And last but not least, if you can, since this is a live stream, share this link live right now with your social circle, so that if there's other people out there who want to learn more about options, they get an opportunity to do so. All right, with all of that, let's bring in my guest. His name is Ron Wheeler. He is part of the VectorVest staff located in Akron, Ohio. He's one of the people that I've known for the time period that I've known him. He's really knowledgeable about options, and he has a unique way of explaining options in a way that is easy to understand. And most people shy away from options courses and things like that, or playing options, because they get intimidated by them. Ron has a unique way of taking that intimidation factor out of the options game to make it easy for anyone. And I look at Joey. Joey's learning about options, and it's because of Ron, because Joey, he needs it to be simple down for him, right, Joey? I'm just saying, Joey, he needs that.
Dumb it down.
I don't want to say dumb it down. I just wanted to say, simplify it. He wants to simplify. So with that, I'm going to bring Ron on. And Ron's going to start off by explaining, talking to you a little bit about himself, who he is, and what he does. So take it away, Ron. We're here together.
All right. Well, first and foremost, can you hear me? Since
Yes.
We had some audio issues this morning.
We can hear you loud and clear, brother.
All right, perfect. Just wanted to double check before I got started and had to do everything over. Well, thank you, of course, Glenn, for hosting this. This is great. I always like working with Glenn. Glenn's a killer presenter, and I love listening to his market analysis every week. So it's always an honor and a privilege to work with Glenn. I've been trading now since 1997, so that's like 24 years now that I've been doing this. And very quickly, I got my start as a commodities trader. I still dabble in commodities from time to time. I day traded futures for over a decade, did very well at that. And then I transitioned about 10 years ago. It's probably been over 10 years, but I just give all general terms nowadays because I'm getting older and I can't remember anything. So over a decade now, I've been doing options. And one of the reasons why I transitioned from trading my futures and day trading futures to options is because I was looking for something that was simple. I was looking for something that was less hands-on. As a day trader, you have to be in front of your screen for, 6, 7 hours a day. Usually there's some pre-work. And while I was making good money doing it, it got to the point where it became a grind. If you ever saw the movie Grounders, where they talk about the grind, that's what day trading is. And there's a point where it doesn't matter how much money you're making. If you're not having fun or enjoying it, it's not worth it to you. Well, in my career, I was introduced to options, and one of my clients that I had for technical analysis that I taught him how to read charts, he had introduced me to the idea of selling options and adding probability to the trades. I would tell him, hey, here's where I'm going to buy corn. I'm going to put my stop here. If the market comes down to this level, I would lose. He's like, well, here's what I'm going to do. I'm going to sell corn options. And as long as we stay above where you think there's a stop, I'm going to make money. And that intrigued me. It didn't intrigue me enough to switch to options because I was doing very well at futures. But as time went on, I got to the point where I'm like, you know what? Maybe I should go back and revisit some of this stuff because it looked a lot easier. And I did. I started dabbling with futures. Futures options. I then started trading SPX options as a primary thing because I traded a lot of E-mini futures. And I really kind of slowly transitioned from day trading to more of a options trader where I was looking for trades anywhere from maybe a week or two where I could put my trades on once or twice a week. I could manage them very, very hands off. But once I was able to really see that I could duplicate my success or my income, I guess you could say, because I don't know about you guys, but I'm more of a are you successful by are you making money, not by how many winning trades you have, losing trades you have. I'm more about money. So once I saw that the money could start to be similar and I could scale it properly to risk, I switched pretty much 98% to options trading. And I've been doing that, like I said, now for really over the last decade. I've been here at VectorVest now for 6 years, and I'm the options income guy, if you will, here at VectorVest. And what I teach here and through primarily the options paycheck is I teach my method of how I sell options on both SPX indexes because I love trading the S&P 500, and I also do it on how to select the right stocks to do this on, probabilities to do it on, and I try to make this as hands-free as you can. So you put the trade on, you really don't have to worry about it. Some brokers you can even put orders to get in with profits or out with a loss. So it kind of goes as hands off as we can, and that's kind of what I primarily do here at VectorVest now is teach these options income or credit spreads to our clients. Whew, that was a lot.
Now, that was a lot, but that's all right because it's important to get all of that information out to what people are in store for today. So, with that being said, I now have the chat open on the Facebook side. I have the chat open on the YouTube side, and between the two of them, let's get some of these questions answered. Now, I'm going to start it off. Now. With the way that the market is going right now, we see the market. Do me a favor, Joey. Bring me on to. I can do it, right? But now I'm going to lose us. All right. Never mind. I'm gonna keep it here for a second. As I look at the market timing graph, all right, we know that the market is moving down. I see a big up candle today. The market's got a massive rebound going on. So let's start it off this way. If people were playing the market because the market was going down and they were buying the puts, should they panic today that now that the market is moving nicely higher today?
I wouldn't be panicking. Um, we're getting that rebound. We're filling the gap, so to speak. I mean,
Absolutely. We fully faded it. We fully faded the gap.
yeah. And there's, there's still a lot of downward sentiment going on.
Right.
One of the things that I did on Friday with my clients is I liquidated a lot of my positions on Friday because of the market guidance. Here at VectorVest, we've been talking about this toppy behavior for so long with the divergences of all of our major indicators. I started peeling away some of my positions, but I probably wouldn't go. These big volatile days can be really hell. They really are. They really kind of play your patience as a trader. I don't try to do anything very, very abruptly, if you will. So
Excellent.
I'm usually patient and wait to see what's going to happen. Could this be, one of those dead cat bounces coming back off that? If we see maybe higher highs tomorrow, I might be getting a little bit more, okay, maybe it's time to start, shutting some of those bearish positions down. I didn't really do anything bearish yet because I'm still not 100% convinced that this market's ready to sell off. We just had a lot of news with the COVID thing. I mean, if you think about the drivers of the market, right, and this is not options, this is just the market in general, right? Earnings are still relatively good. If inflation is
Right.
truly transitory, well, that's not a problem, and interest rates are still low. So I wouldn't go panicking yet. But if you start seeing tomorrow where we're going higher, and then tomorrow or the day after that going higher, then I'd start, you know what, maybe it's time to start peeling off some of that protective layer.
So I'm going to add another layer to that from, I do the daily color guard from time to time. One thing that I've learned is that you don't see this. I don't know if you do or not, but we're on the market timing graph. And I'm showing an ascending wedge, which is for the most part, or a rising wedge, which is for the most part a bearish pattern in the market. So as I look at that right now, I need not only, excuse me, wow, that's weird.
Okay.
Yeah, I think I am. I need not only for this day, just like you said, I don't need just for this day for the market to move up. I need some confirmation of the move. Notice that, though, as we look at this market timing graph, folks, if you're going to use the market timing graph as a way to get you out of the market, and let me go back to the home page. If you're going to use the market timing graph to get you out of the market, I need to use the color guard of the market timing graph to get me back into the market. Because one day doesn't make a trend. First thing I'm looking for in the trend column is for the primary wave to go up. That tells me that the market's got some upside right now. Then I'm looking for the underlying trend or the MTI to go above 1, the buy to sell ratio, RT, all of those things within the VectorVest software to help me to get back higher. But as I go back to the graph, one day doesn't make a trend. And from my own personal perspective, I still hold either 3 or 4 long positions, but I do have a hedge position, which is SRTY. Whether I have it on a call or whatever, I still am going to hedge my portfolio, and I would still look at it even from an options perspective. Keep the play in play until the play hits your stop. So that would be my answer behind it all. And I like your answer. Don't panic, but you know something? If any positions that you're in that were losing you money and they hit your stop criteria or it hit your tolerance for pain, then you get out of it and wait and see what the market wants to do. So that was just me adding my 2 cents. It was more like $1.50 to the whole situation. All right.
Yeah, we can also use VIX options too, which is nice. You can just buy some VIX options, some calls, really. And when the market starts going nuts like this, the VIX often spikes really high and really fast, and it's a nice way to hedge as well.
All right, I got you. All right, I'm looking to see where's your questions, folks. I know you. Where's the questions? I know you got them, and this is a good opportunity. Is if you are new to the market or you want to know, then this is your opportunity to buy to take advantage of it. Hi, I did the options course a while back. Can I watch the material again, please? That came from Pankaj on YouTube.
Well, if it was the paycheck course, you have 1 year to view the recordings and view all the materials. So if you're past that 1 year, we only let you have the materials for a year. So if you are past that 1 year, give us a call. We do have a very special, very discounted retake rate.
Okay.
We can open that back up for you. You get, all the software again if you want to view it, and you can get right back into it and get updated and all that kind of stuff. So if it's been less than a year, yes, call support and let us know. If it's been more than a year, let us know also. If you're interested in a retake, we can open that up for you for another year. Plus, you can do the live course that starts in August with all the software and everything again.
All right. And now I've got some questions coming up. That's good. I've got one on Facebook. Tilray August options $20 calls. Is that a good play? I don't have the software. I don't have Options Pro open or anything. Ron May And if he
I
does,
do.
all right, and if he does, then he can take a look. Tilray August options $20 calls. What do you think?
Are you looking to sell them?
That was Lotta. I don't know. It just says Tilray August options $20 calls. We'll come back to that question. Zlata, you got to tell me what you want to do. You want to buy them or sell them? I have another one. And this is on YouTube. And this comes from Mike. I'm new to options. What is an easy setup for me to understand and with pretty good surety to make gains? That may be a loaded question.
It's kind of a loaded question
Okay.
because at the end of the day, options are only a vehicle, if you will, right? Ultimately, if you want something that has a good degree of success, you really have to be an option seller to achieve that. Because here's the thing with options, right? Now, we just went back to that question on Tilray. And the reason why I asked if you were buying or if you were selling, well, here's the problem. Tilray now is at $13 a share. Now, Tilray is, I'm looking at the graph of it right now,
And
and
it
you can
looks,
make the case that today it's up, and who knows, maybe it's bottom fishing and we might be popping up on Tilray.
I think he says that he's got them. He says he's in them. Tilray August options $20 calls. That's what it. All right. So it looks like he might have bought them from that.
Okay.
Wallet.
So now on something like that, right? If the stock goes up, it's really not gonna, you're really not gonna see a really good gain unless that stock really starts getting up above probably 17 or $18 a share. And it's going to have to do it, is the thing. It's going to have to do it in the next 6 or 7 days. Because the reason why is that option is so out of the money. It's a $20 call. You're not going to see real significant gains until that stock's over 20 bucks. And if you look at simply statistics, and this is what I do as an options trader, right? Every option has statistics kind of built into it. We here at VectorVest, we have a software called Options Pro. We have what's called the ITM percentage. And a lot of brokers have this too, Thinkorswim, IB. It's a very common thing in options. So what I do is I take a look at the ITM percentage. As an option buyer, the higher that ITM percentage within a certain range is, the better return you're going to get on your money. So Tilray basically has a 2.5% chance to reach $20 by August 31st.
That's a low number.
Exactly. That's almost a 3 standard deviation move. In fact, it probably is a 3. Actually, it's a 2 standard deviation move, almost 2. So buying an option like that is kind of what I term as the lottery play. Is it terrible? I don't want to say it's terrible because, if you finally do get a good move and Tilray bumps up to $25 a share, that $30 option can become a $300-400 gain, right? But the chance of that happening is only 2% at best.
And that's the
Now,
tough thing that people go through in trying to play options.
yeah. And I get it because it's a cheap play to do that, but you're putting probability not on your side. When you buy an option, it's best to buy an option what I call near the money. The money means the strike price compared to the last price of the stock. So right now, Tilray's like 14 bucks a share. You're going to want to buy something nearer to Tilray. Now, I usually go out maybe 35 to 45 days and something like that as expiration goes. I try to keep my probabilities to 50%. My delta, which is another key option as an option buyer, I try to keep that towards 50 as well. A lot of option traders use delta as a probability metric. If the delta is 50, you have a 50% chance of that option being in the money. That means if I buy a $15 option on Tilray and my delta is 50, it means that Tilray has a 50% chance of being over $15 when the option expires. That's what a lot of people use delta for. Now, buying an option is still very difficult because with an option, you have to overcome the strike price. So here's what I mean by this. If you buy an option, let's say on XYZ, it's a $100 stock. You buy a call, and let's say that call costs you $5. In order for you to see very significant gains, and listen, if the stock goes up right away, you're going to see profits on that option. Don't get me wrong. Expiration is what I'm really talking about here. To really make significant money, you have to overcome the premium price. So $100 stock, $5 premium, you're not really going to make significant money until the stock goes over 105. Okay, you're just not going to do it. Now, what that does is it kind of puts you behind in probability even more. If the stock goes up $1 and you bought 100 shares, you'd make $1. With an option, when you have time decay, volatility, all that stuff working against you, it can get to a point where even if you get the market direction right, the option doesn't cooperate and you end up breaking even or even losing a little bit of money. That's the problem with being an option buyer. Now, listen, I do option buying occasionally. It's one of the things I do with one of our proprietary features of Options Pro called a volume map. But I know that we're talking about the paycheck and being an option seller, but that question really does come right into how do you do options where you really have a better chance of winning? And that is why I'm an option seller, because here's what I know. I know that I am not perfect with my analysis. I know that markets can go different from what I expect. So, what I usually do, again, using the probabilities that options provide, I take a quick look and say, listen, I think this stock is going to go up. Okay. One of the stocks that I'm out of now, but I was in before was Target. Target's been a fantastic stock.
Amen to that.
I look at Target and I say it's right now, it's up $4 today. It's about 255. What I like to do is I like to pick a line in the sand. If I were to buy 100 shares of Target, I'd buy them at 255. Maybe placing a stop at like 245. Okay. What I would do is I would go out into my options and I would look going into August in that 21 to 45 day range. And I'd say, you know what? Maybe it's better if I sell a 245 put. Because what happens with that 245 put is if the market goes up, I make money. Okay. The price of the put that you sold goes down as the market goes higher. If Target doesn't go down and go sideways, or it doesn't go up and go sideways, I still make money. As long as Target can stay above 245, I'm still profitable on that trade. Now, that's only one small portion. Okay. Selling puts in a bullish market is really how I make the majority of my money, or selling calls in a downward market, by the way, because I can do it in upwards or downwards markets. Now, there's still an element of risk and reward, right? Because by selling naked options, like selling a naked put or a naked call, you do open yourself up to a large loss. So it's got to be the right loss as well. If I look at a trade right now on Target, I'm just looking, I don't know when earnings are on Target. I'd have to look that up too. But, like right now, I could basically sell a 245, 240 put spread on Target. I would have a profit of about $70 and a risk of only about $80. But based on probability, I have an 80% likelihood that I'll make money. So I'm looking to make 70. I'm going to lose probably about, looking at the graph here, about 80, 85 bucks if it goes against me. But I have, as long as it stays above 245, I have a fantastic opportunity to make money. Now, I got out of a Target trade earlier. Let me look at my Target trade that I got out of. I hope I have the graph here for it. I can just go to my broker and look it up. TGT. All right, what did I do on Target? Okay, 240, 230. So let me give you guys a real example of a trade I took on Target. On July 7th, all right, July 7th, Target was around $246 a share. So I did a 240, 230 put spread. Now I want you to think about that. With that big volatility that we had yesterday, I was still so far in the right range, it really didn't make much of a difference. Think about the S&P, right? Think about the S&P 500. I took a trade on July 7th on the S&P 500. Or I'm sorry, July 6th. July 6th was Monday. Was it July 6th? It was July 6th. I'm just looking at my brokerage statement right now. And on July 6th, I took a trade on the S&P. Let me pull up my S&P graph. I know you guys can't see this, but you know where the S&P was and you know where it was yesterday.
I got the graphs up for them, so you keep talking. I'm showing them on the graph.
All right, cool. On July 6th, that was a Monday, because I placed a lot of my trades on Monday just because that's where all my clients get together with me. I did a spread on the S&P where I sold a 4190, 4170 spread. Okay. Now I want you to think of all the volatility that we've had in the market since then. Okay. And guess what? Even with yesterday's low, which was 42.35, we never hit 41.90. And now today the market's bounced back. And my position, I'm just looking at my account statement. My position is now, I think it's down 150 bucks as it is right now. It was down a lot more yesterday, and it almost got to the point where I repaired it. But that position was placed so far away from the market that it really withstood the volatility that we're seeing. That's the beauty of being an option seller. Now, listen, it's not always going to go like that. Okay. Every trade that I take is not going to be a winner. I had a trade on NVIDIA a little while back, right? I did a trade on NVIDIA thinking that the market was going to pop back up when it had its profit taking phase. It had a really nice trend up. Then it came back down around July 8th or July 9th. So on actually the 12th, I got into an NVIDIA trade, right? I thought the stock was going to go back up. Obviously, I was wrong. The stock went down. I did a trade at 785 and 780. I'm sorry. Wait a minute. I'm looking at the wrong stock. Oh, NVIDIA just had a split. That's why it's weird now. I originally did it at 785, 780, right? I had a $500 projected profit on that stock. If it went against me, I would only lose like $250. That's it. And unfortunately it did go against me, and I ended up losing about $275 on that position. So even when the stock was going up, I had a nice buffer to be wrong. And even when I'm wrong, as long as you do these trades properly, you're going to be all right. That is the advantage, and that's why I've become an option seller, because if you want to put probability in your corner, being a buyer is going to give you the highest risk reward, right? Or the lowest risk reward, I should say. It's going to give you that I'm going to make $1,000 by only risking 200. But the chance of those trades really coming in are low. Most professionals that do options are option sellers, because what we can do is we can put probability in our corner by picking points where the stock is probably not going to get to. We get to control risk very, very well, because when we do these option spreads, not really just naked option selling, when we do these option spreads, we allow ourselves to see, here's the most I can gain no matter what. Here's the most I can lose no matter what. And you control that risk aggressively. One of the biggest things that you got to learn as an option spread person, as an option seller even, is sometimes the stock is beautiful. Sometimes the graph takes your breath away, but you can't take the options trade, because it's going to put that trade into a situation where you might only make $1,000, but then you're going to lose 3,000 or 4,000 if it goes against you. Even that graph that looks so beautiful may not be the right option to sell at that given time. So you got to be very, very disciplined to make sure you're watching that stuff carefully. If you do it correctly, it can be profitable. That's the key. But putting things into your favor, your probability, that's how you can successfully make money as an option seller on the long term. That's my feeling. And that's what I've been doing now, again, for like the last 10 years. I've never been a big option buyer. I do buy calls based on some volume stuff that I do, that if you join the paycheck class, you'll probably see some of that in our week-to-week mentoring and coaching that I do. But historically, most of my trades are option sells, because that's how I can truly put probability in my direction.
All right. The beautiful thing that I like about Ron is his explanation of things. But Ron, I got a few questions, and now when you answer these, hit the point, go, so I can get you the next one. We good with that?
Yep.
All right. I'm getting more people on YouTube asking questions than Facebook. Not sure why, but I just am. So I'm going to answer Barry's question. Barry's on YouTube says, how do I find option tables? If you're looking for the option chains, your broker should have those. or you can always go out and get that information from like Yahoo Finance and things like that. But if you want the real-time option change, you can get that primarily from your broker's account. So I'll answer that one for you real quick, Barry. Does it cost a lot to start up options? The answer to that question is I'm going to say no, because options cost a lot less than buying a stock outright. But you do have to look at it that you're taking charge of lots of 100 shares. You're trading it as 100 shares, even though the options are a lot less expensive. And you know something? I'm going to tell you the story real quick. When we first started at VectorVest, after we worked for a year, we got, what did we get, a $2,500 bonus? It was $2,500.
Yeah.
It was $2,500. I took $1,000 of that and put it into the market, and I used options. Within 8 years, I grew that into over $80,000. Now, that was an ideal situation because I started in 2004, and so 2005 I got it. 2007, 2008 is where I made the majority of my money on options to the downside. I made a lot of money playing the market to the downside with options during that, and I was actually primarily a buyer of calls and puts, and that's what I did. So for those people who have not a lot of money in the market, options is a great way to segue into starting to make money. And I'm with Ron. As I've gotten older and more wiser in that space, selling options becomes more of the viable way because most options expire worthless. So selling options is still, in my mind, a better way. You take in the premium, and as long as it stays above or below the strike that you sold, you're going to be fine. All right, so that's to answer both of those questions for both Barry and Jeffrey. Talk about, and this is what happened. This is on Facebook. Talk about what happens when a split happens on a stock, Ron.
Nothing major. I've done it a couple times through some stock splits, mainly Apple, because I actually, I guess in my Jim Cramer voice, and full disclosure, I own Apple shares. So when I trade Apple options, that's when I really get hit with splits. But splits don't bother me because all that happens really is that your options get split. If it like at Apple, right, when they were at 700, I had $700 calls. Well, the next day I had 7 $100 calls, basically. So they get split according to the position. In my experience, nothing negative really happens from that. It's not like the stock gets split and then the options all go haywire. It's pretty much an easy transition into the new strike prices. I know Nvidia just split. That's why I was looking at my Nvidia trade. I'm like, wait a minute, why is Nvidia only 100 and some bucks a share? And I was trading $700 options or whatever I was trading. Well, it's split. Nvidia's been selling off, but it had nothing to do with the split. Nvidia was just following the overall market with NASDAQ and all that kind of stuff. And it started selling off way before that. That wasn't split really. That was just more of Nvidia was ready to do profit taking. So I don't look at splits as that big of a deal. I know, like when I start looking at trades in my real-time coaching class, they'll always say, hey, Ron, they're splitting. Is that a big deal? Nah, it's fine. The options get split. Your position, becomes twice as much, 3 times as much, 4 times as much, but the money remains the same. If I took a trade and I was looking to make $1,000 with an $800 risk, I would still have $1,000 gain, $800 risk, even post split. And the split, in theory, right, the split should drive the stock higher because now that popular great stock is at a much cheaper price where people can take advantage of it, theoretically. But no, stock splits don't bother me. It splits the options positions, and it really doesn't affect anything that has to do with it. I've never really seen it drive up volatility a ton. I've never really seen any major issues from splits.
All right, I'm going to put 2 questions together. Jack and Air Battle, both on YouTube. Jack says, there are several VV option classes. What order should I take them all in? Jack, I'm going to say we have an options jump starter course, which gives you basic understanding the options and how to get in and out of them. And then most likely I would say go to the options paycheck course number 2. Now, I'm going to mix this in with Air Battle's question that says, new to this, so have no understanding of selling options. All right. And that's where the options paycheck course comes into Air Battle. And if you're new to this, I'm going to invite you to our options jump starter course. Air Battle also says I buy and sell stock. How to broker sell options on bank stock I own, made good money doing it all myself now. So between the two of them, between Jack and Air Battle, I'm going to say for you guys that are new to it, the options jump starter course really starts putting together the terminology, the calls, the puts, the deltas, the Greeks, and all of that stuff. And once you've learned that and start learning how to also, we talk about selling covered calls in there a little bit. And then we get into the options paycheck course, which really gets into generating a monthly income by selling options. But I would start off with the options jump starter course first. On YouTube, Maria says, on 625, bought one contract, sell ABR, July 16th, 21, 1750 put to open, buy one ABR, July 16th, 21, 20 to open. Wow, it's tough for me to understand that whole thing. Oh.
Did you say that was on YouTube or Facebook?
That's on Facebook. That was from Maria Thing. Can you see the Facebook chat?
I see the YouTube chat. I didn't see the Facebook chat.
It's a lot going on, but it says, need to figure out what happened. I know I made money, but don't see the breakdown. So bought one contract, sell ABR July. Maria, that's a lot. I need that broken down a little bit more in the chat so I can better present that to Ron. And I apologize for that. All right. Joey, you put this over here for. All right. All right. So I'll come back to that. I'm not ready for that yet. But now keep it there. All right. Maria also has, you're on both sides. Maria also has, I've been paper trading debt and credit options to get used to broker platform, and they have options playbook on Wednesday. Why VectorVest? Oh, options playbook on Wednesday? I don't know what, unless you're talking about, what is that, TradeStation? I'm not sure. I'm not sure. All right, and unless I'm not better in understanding that question either, that's both of your questions, Maria. I'm sorry I'm not picking up on both of them. Cold Dip on YouTube says, question for Ron. I have SPX put vertical credit 30 July, sold 41.75, bought 4,200. Do I stay or take a loss on it 10 days to go? Do I need to repeat?
Oh, you should definitely stay.
Okay. That's for you, Cold Dip. That was quick.
Ride that position out, rule based. I mean, yeah, you definitely stay with it at this point.
All right. Chad, Ron, I had a 25-day BPS on. I mitigated with the call to create the Iron Condor.
Mm-hmm.
The bounce back is hitting hard on the call side. You ever get out or just follow the rules?
If I see that the market is going to probably continue higher, the answer is yes. We talked about this a little bit earlier on when I said that, don't get over one down day or one up day, don't do anything rash. So if I see the market continuing to build some more strength tomorrow, there will be times I will exit that other side of the spread. That's one of the downsides sometimes of these market bounce backs like this. They get into that mitigation area where you can have kind of like, you put the other side of the trade on, it bounces back right away, and it can get hit very, very fast. I don't know if you have like what delta you put the mitigation on. That's by one of the things I've been doing in my URS or my my coaching class is I've been putting that other side mitigation on with a lot higher delta. That way, yes, the trade probably would be hit today with the 53-point move back up, but the loss would be very, very low, So I'd have to see everything in kind of perfect detail, but I wouldn't do anything rash based on a one-day move. That's the key.
All right. Joey brought to my attention that we are, for everybody who's here, we are going to give you a 5-step checklist to generate an extra 3% per month in income safely using options. All right. That's going to be, we're going to give that away to you. Everybody. Do they have to type something in order to get it?
Paycheck entered into the free
I didn't
course.
get to that point yet. All right. But for this, they don't have to do anything. We're just going to give everybody this.
And I put it in.
All right, and it's in the chat. You're going to click on that if you need to get everybody in the chat gets access to this 5-step checklist. No, Jay, don't start. Don't even start typing mug in the room. I will so shut you down. I will shut you down. Now, the second part of this is we are going to give away an options paycheck course. All right, we're going to give away an options paycheck course. It's going to be at the end, so you need to stay here in order to participate in it. Do not type anything in the room yet, and you don't even know what you need to type, so don't worry about typing it in. But I did want to say for everybody who's here, whether you're on the Facebook side or you're on the YouTube side, everyone will get this 5-step checklist to generate an extra 3% per month in income safely using options. And again, we will give away an options course course today that Ron will be teaching. All right, so I wanted to put that out to you. There's a link in the chat for you to get that checklist as well. All right, and there we go. All right, thank you for that, Joey. But again, we are giving away an options course today at the end. So if you ain't here at the end, you ain't getting it. All right. Let's go see. Sounds like I wasn't picking up what Maria was putting down. I'm sorry, Maria. Let's go back up. Somebody asked me what was the difference between a call and a put. You buy a call or you buy a put, or you can sell a call or sell a put. But from the simplistic side of buying a call in anticipation of the stock's price going up, you get to participate in the stock's price going higher, but at a much smaller price because the option is much less expensive than the stock. And to buy a put in anticipation of a stock's price going down without having to short a stock, as long as the stock's price goes down, that put goes up in value. So that is from that perspective really easy between a call and a put. Somebody keeps typing Amazon. I'm not unless you got a question about Amazon, I'm not sure. I'm not going to answer what that is.
By the way, Amazon is one stock that I usually do not use for income because it's pretty wild. I mean, it could go up $60 a share, down $70 a share. It's one of those ones that is a little crazy.
And I got a good question. And Ron, don't be afraid to answer this question because I'm not afraid to put it out there. Okay? Sashin says, how much money required for paycheck options trading? That's a good question. And I think that we owe that a good answer, a good, honest answer.
Yeah, I mean, our most simplistic S&P 500 system, I tell you to have $5,000. That'll allow you to trade one contract of one of our S&P 500 trades. I would realistically, if you want to kind of do some stocks and then you want to do some equity indexes, I would say 25,000 is a good base to start with. So I mean, you can start with as little as $5,000, and my goal is to make an aggregate of 3% a month. Now, let me explain how that works. There's going to be months when you make 10%. There's going to be months when you actually have a little bit of a drawdown. That's just the way that trading works. But I say on average 3%. I've done that with options in VectorVest for the last 5 out of 6 years. I've done that. 2018, I was under that, but not by much. So it's definitely doable in any type of market condition through volatility. We'll see how I do this year. I'm a little bit behind this year too because of some of the volatility, but we'll see how this year turns out. You can do this in that 3% for $5,000. One contract of the S&P options, 3% a month, $150 a month. Historically, that trade has worked over the last decade. So you can do it with one contract of the S&P for as little as $5,000. And that's the easiest, by the way. If you only have a small account, trading index options are really the easiest way to go because it's one trade with one symbol, and you don't have to worry about all the different liquidity or the different volatility factors and stocks and earnings and all that kind of stuff. It just makes your life a little bit easier.
And I get that question asked a lot because people are like, well, you talk about da 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 da. That's a good, honest answer to the question. All right. So I appreciate that, Ron. All right. Harry on YouTube's got a question. I started buying Aflac in the 1980s and have huge profits. So obviously, I do not want the shares to be called away. How can I use options with the minimum chance of having them called away?
Well, I mean, the best way to do that, of course, is a covered call. What I always like to say is if you want to do a covered call, because a covered call is basically you're going to sell an option against your underlying position. And like you said, you don't want to be called away because that could be kind of disastrous. But here's the thing. You very rarely get called away as long as you manage that trade right. Like right now, Aflac, and this is not official trading advice for anything, but Aflac is trading for, let's say, it's like $53. Number one, you have earnings coming up, so I wouldn't really do anything about selling anything for when earnings are coming. You never want to have a covered call into an earnings announcement on a stock that you want to keep. Now, from the option buying perspective, I'd tell you maybe to buy some puts on it in case the earnings announcement doesn't go your way. But as far as selling, typically what you're going to do is this. You are going to sell an option usually about 35 to 45 days away. So let's say earnings was out of the picture. You'd probably want to sell something in August right now, right? Now, what I try to do is I try to put that out a little bit farther in price. Normally, when somebody does a covered call, I would tell you to sell something maybe about 35 to 40% probable. So like on Aflac, I'd say, okay, the stock's at 53. Maybe right now you'd want to sell a 54 or a 54.50, right? It's $1.50, buck away from the market. If you want to keep the stock though, probably not the way to go. You want to sell something a little bit further out. Okay. So you'd probably want to sell something in the mid to low 30s, like a 54 or a 50. I would say probably even a 55 right now with a little less probability of that getting hit. It's going to give you 50 cents a share on your position. Now, here's the kicker though. This is the big misconception about options. People think that, okay, Ron, I sold a $55 call on Aflac. The stock hits 55, boom, I get called away right away. That's not true. At the end of the day, only 6%, and I might be off by a percent or two, only 6% of options ever result in a stock position. That basically means 6% of options ever become assigned or exercised. If you really want to keep the stock, if Aflac gets over $55 a share, you just exit the option. Just buy it back. You're going to sell it. Right now it's going for about 50 cents. If the stock hits 55, you buy the option back or exit the position. You still made money because the stock went from 53.17 to 55. The option's going to increase. So you're going to take a little bit of a loss on the option in that case, but you still made money overall and you tried to generate income. Now, if the stock didn't go up and you get to collect the premium, even better. But I always tell people if they want to keep the stock, push your probabilities out, get into the low 30% range, deltas in the low 30s in that area. You're not exactly looking for the best, rate of return. You're just looking at capitalizing and maybe picking up a little extra premium from that if you can. So the biggest thing though is don't be afraid to exit your position. If you sell a covered call on a stock that you want to own, you can always exit that call position. Just go to your broker, say right click, close position. They'll exit to close for you. Yes, you'll take a loss, but you'll still keep your stock. And because the stock had that capital appreciation, you're still going to make money.
All right. And Archie is being very persistent in getting his question answered in regards how do you learn more about the Greeks? It's going to be one of two ways. One, Google it. You can Google the hell out of anything on the internet. That's the easiest way to do it, Archie. Or number two, In our options jumpstarter course, Ron, do you not go through all of the Greeks in our options jumpstarter course, or is
Not
it
all of them,
okay?
because they're not all. They're not. You know, here's the thing with the Greeks is you don't need to understand and know exactly what all the Greeks do. There are really only two that you really need to know, and that's kind of like delta and theta. Delta is the price of how the option moves based on a dollar underlying stock. Theta is time decay every day. Um, the way that we do it here at VectorVest, we focus more on the how to put the trade together properly that takes into account all of the Greeks, right? So, for instance, I can speak for the options paycheck because that's the course that, well, I mean, I help put together the options Jumpstarter too. We basically teach you the trades to take account of all the Greeks, right? Vega's volatility. If you're an option seller, increasing Vega is bad. But if Vega is decreasing or volatility is decreasing, it's good. So what we do is we show you how to structure the trade in the best way to take advantage of volatility so you don't have to worry about it. We take advantage of delta by showing you which is the right delta range to use. We take in, account and say, hey, take theta out of the picture by buying a 35 to 45 day option. Put theta in your benefit by selling a 21 to 45 day option. So we don't teach the Greeks to the letter. We teach more of how to put the trades together to take advantage of the Greeks, if that makes sense.
And that's the reason why I made mention about going out to the internet to learn more about the Greeks. What we do with the Greeks is, as Ron says, we show you how to use specific Greeks to be able to effectively help you to make the right decisions. You don't need all of them, and that's cool. All right, Nicholas, is it safe to trade on SoFi with a large portfolio that an inexperienced trader has picked based on life experiences? Does that make
Honestly,
sense to you?
I could not tell you, to be
Oh,
completely fair.
okay.
Now I assume SoFi is I know it's SoFi. They do student loan consolidations and all that kind of stuff. I assume they have a brokerage now. Yeah, Invest. I'm looking at their website right now. I've done business with SoFi. They're really great to do business with, by the way. Um, here's the thing. If you're doing like buy and hold investing, it's perfectly fine, right? Because what is the whole thing about buy and hold that over the course of 10 years, it's really hard to lose money if you keep your positions that long. You're gonna have to deal with a lot of volatility. But if you're in it for the long haul, sure, there's nothing really wrong with it. It's really more about maximizing returns is really what it's about. That's why we at VectorVest exist. That's why Paycheck exists. That's why Jumpstarter exists. Is buy and hold okay? Sure it is, but you're kind of maybe selling yourself a little bit short of what you could accomplish if you just learn some basics about market timing. What we talking about here at VectorVest, right? And by the way, even my option selling is all about what to buy, when to buy, and when to sell. It really, really is. It all goes into that base because when I do my option selling, I use VectorVest to say, okay, now's a good time to buy something. This is a good stock to buy based on VectorVest fundamentals, and here's how I'm going to do it with an options instead of the stock. Same way in the downward market too. You can really up your returns by just adding a little bit of stock selection and market timing into play. So you get in at the right time. You get out if the market goes against you. So if a stock goes from 100 to 200, but in the process goes from 100 to 150 to 120, then to 200, with just a little bit of work, you can make sure that you're in at 100, out at 115, back in at 125, and you don't have to have that. You can maximize returns by not kind of staying in for the down cycles. And it's better if you kind of learn a little bit, to be honest with you.
All right. Next question. This comes from Sharish. Again, I got my I got my YouTube people asking more questions than not. How much time one needs to devote to option trading to earn a reasonable return for the time spent for a beginner?
I would say as an absolute beginner, you're probably going to spend an hour or two a week. Seriously, it's not that difficult. It really, really isn't. We can narrow it down to 15 minutes a week if you only want to trade something like an index trade. We can really make it that easy. If you want to get to my level, to where I'm trading options, I probably spend in real trading, by the way, I probably spend an hour and a half a week trading. All of my trading is based on my clients. Like, back when before I was with VectorVest, I would trade Mondays, occasionally Tuesday, Wednesday, Thursday, Fridays. Now I've basically aligned all of my personal trading with my coaching students. So I trade S&Ps on Monday mornings. I have an hour class. It takes me about 10 minutes to get my trades in for that. I teach credit spreads for stocks on Mondays at 2 p.m. I spend about an hour with my students going through the market and going through the searches and the scans, finding options trades. I spend about an hour with them on Wednesday. Now, in all turn, I spend about 3 hours a week trading because I'm also trading along with my coaching clients. If I didn't have my coaching clients, I could knock that down to probably about 30 minutes. It really isn't that difficult. Now, even the beginners, to do all the stuff that I do with them, 3 hours a week until you really get your legs underneath you. And one of the beautiful things that I do as an options coach, as an options instructor, is I try to teach things to where it is mechanical. You are following the same procedures every single time. I try to take out all ambiguity of a trade. If the market does this, you do this. If the stock does this, you do this. No questions, no answers. Occasionally we operate in some gray areas when I'm in a live class, but on your own, I try to give you a very, very sound rule-based set approach to things. So there's no questioning of it. You just put the trade on, you know where you're getting in, know where you're getting out. It meets the criteria, you're done. It doesn't really take a long time once you have that criteria laid out.
All right. Couple of questions I'm going to put back to back together again. What is the best course for selling covered calls? You do talk about covered calls in the options jump starter, do you not, Ron?
They do. And I know that for covered calls, my colleague Jim Penna, who works with me in coaching, he actually has a covered call boot camp that he just did. He might be doing that again.
All right. So that's the answer Tim's question. And you know something? Frank's question, at what percentage of loss do you set your stop? I'm not going to answer that here because our courses, as Ron was talking about, are very structured, where he will walk you through how to set stop losses on your options. So I won't answer that here, but the answer can be gained from one of the option courses. And again, I forgot about the boot camp course. So there are 3 courses that we have. The options boot camp course is about 7 days. We're going to walk you through it. In 7 days, you're going to be able to put on your first options trade. So we got that one. Then we have the options jump starter, and then we have the options paycheck. So I would take them in that order: the options boot camp, the options jump starter, and then the options paycheck. And you will be extremely well versed when it comes down to options. And I don't think anybody can put any shade on you when you've taken all 3. Now, they can get, especially the options paycheck course can get to be a little expensive. That's fine. I think that you can generate enough income from those other 2 courses, from taking those courses, that you'll be more than willing to pay for the options paycheck when it comes time for you to do that. So I'm putting that out there as well. Now, somebody's asking me about Ron helps you make money. That's Jay. Jay's done a lot of talking in here. This is a great courses, and the course coaching is Jay, I'm going to help you with your typing. The coaching is awesome. Todd says, is it possible to place a stop loss on options? Don't see it. That's a good question.
It really got to depend. It depends on your broker. It really does.
All right, so that was quick.
Thinkorswim and Interactive Brokers, it's effectively pretty easy to do it, even on spreads. But those are the 2 that I can speak of.
And I'm going to take one more question before we do our giveaway. Do you need prior knowledge of options when joining the options paycheck course or webinar? Not the webinar, but the course, I would say yes. You do need, and that's my answer, Ron. Do you want to add to that or change that around a little bit? So the question is, do you need prior knowledge of options when joining the options paycheck? And I'm going to change that from webinar to course. And I say The answer is yes.
It's a yes is definitely helpful. Now, as part of the options paycheck course, by the way, we also give you what's called our option foundation course. It's like a online webinar that you can watch that teaches you the basics. So before the live course actually starts, we give you a streaming course where it teaches you what a call is, teaches you what a put is, talks about the basics of options. So we actually give you that in case you need to learn a little bit more about options before you take the course. So it is nice to have at least a basic understanding of what a call and a put is. It's not 100% required because we do kind of offer that foundation level course before the live paycheck starts. I would say the biggest, in my opinion, requisite of the paycheck course is being open to learn, of course, open to knowing that, hey, I might have to be stumbling around the first session or two until I get my feet under me with options. I think the biggest thing that you need is have an understanding of how to buy a stock, how to look at a chart, how to sell a stock. If you at least have gone into a broker, bought something and sold something, I think that you have a good start for how we can sell options. Because here's what I always say is, back when I first started trading, I always went to my mentor and said, I don't understand how I can sell something I don't own and why. He's like, just stop thinking about it. He's like, who cares? When you go into a broker and you want to buy something, you click buy, right? Yes. Well, what happens? Well, who cares what happens? He would tell me. You click buy. If it goes up, you make money. If you want to sell something, you click sell. But when I sell, who cares? All you need to know is when you click sell and the stock goes down or the futures that you did go down, you make money and you click on buy to exit. If you were going long, you click on buy to enter, sell to exit. If you're going short, you click on sell to enter, buy to exit. And I broke that down in simple. I'm like, okay, don't worry about the background stuff. This is all I need to know. As long as you're willing to kind of be okay with that, I would say you don't really need a lot of prerequisites because you're going to know what a call is. You're going to know what a put is. We're going to teach that to you. Don't get me wrong. The first part of module 1 is basic options, but we're only going to spend probably about 20 minutes on it. But we do have that foundation where you can watch 3 or 4 streaming classes to kind of give you a foundation before the class starts. So it's very, very helpful, but we do offer you some base level education as well.
All right. So now that's going to be the last question. And guess what? For those of you who have more questions, we're going to need to do this again. I love the questions that we had today. And I knew that we weren't going to be able to answer all of them, but between Facebook, it looks like the YouTube crowd, though, was more active on the question side than the Facebook. I actually brought up the Facebook side so I could look at them, but it looks like the YouTube side was rocking and rolling with the questions, and the majority of the questions came from there. So I'll tell you what we're going to do. As I mentioned, Joey put the link back in there for them again. Everyone's going to get access to a free checklist, a 5-step checklist on how to, help you with getting 3% on a monthly basis for options income. All right. Now, the next thing is, because of all of what Ron was talking about in regards to the options paycheck course, Clay should be in the background. I hope you are. Is he? Do you know? He is good. All right. This is what I need you to do. That options paycheck course is the crystal de resistance, or the pistol de resistance, whatever the hell that is with the and the resistance. It's the top of the line. It's the top of the line option stuff. We're going to give away a course right now. In order to be put in for that, you've got to type paycheck in the room right now. You got to type paycheck in the room right now. We are giving away an options paycheck course right now. All right, so as you type it into the room, we're going to, not with all, Mark wants that paycheck course. Look at that. You type it into the room in about a minute. In about a minute, we're going to, and we're looking at both the YouTube side and the Facebook side. I need you people on Facebook to type in paycheck, folks. David typed it in. Gary typed it in. Come on, folks. This is $1,000 I'm giving away to you right now. So between YouTube and Facebook, you guys need to type paycheck in the room. As you do that, Clay will be in the background. He's going to text over to me who won it, and you're going to win a live you're going to win a paycheck course. Ron will teach it. A lot of the other questions that were asked in the room, Ron will cover in that course. So we got a lot of good answers for you guys out today. I'm glad that you brought your questions. Oh, now Facebook wants to wake up and type in stuff. Now you want to wake up and type in stuff. You didn't want to type in much in the way of questions. Oh, but you want that course, don't you? Mm-hmm. Yeah. All right, so funny. I love you guys. I love VV Nation. That's what it comes down to. I love VV Nation. So in a minute, man, Paycheck's just going ballistic on the screen. In a minute, hey, if you haven't already, both of you on both Facebook and YouTube, please hit the like button, hit the like button, hit the like button. I think Ron does so much when he brings what he brings to the table. I love having him on YouTube. And again, we had him on for a quick session on Trending Thursday last week. It was awesome. You guys say you want to see him more. We're going to see him more. And I was talking to Brian, I'm talking to Ron. I'm trying to see if I can get him on at least once a month. If I can get him on once a month, you guys need to show up and show out. All right, hit the like button, hit the like button, hit the like button, hit the like button. All right, do I have a winner yet? Not yet. I'm still waiting on a winner. Still paychecks. There's still a lot of paychecks coming in. Ron, man, thank you so much for being here today and taking the time. I know you got a lot of stuff going on. You got a lot of stuff going on. So I thank you so much for being here.
Thank you for hosting. I always enjoy working with you, Glenn.
Well, we work well together. I remember the first time we went on the road. I think, didn't we go to Cincinnati?
We did. I think we did. Yeah, I think that's where it was.
It was Cincinnati. Yeah, that was the first time, and we melded together very well. So I definitely enjoy having you here. All right, man. Now the likes are coming up. The likes and the hearts are coming up on Facebook. I don't know how many likes do we have on 63. Are you kidding me? Wow. You guys need to show some Ron some love on YouTube, bro. 63? That's all we got as far as likes? All right, it is what it is. If you don't want me to bring them back again, just take away the likes. All right, how about that? Just take away the likes. I'm trying to help you guys out. All right, still waiting for the tabulation to come in so we can find out who won. And it's all Joey's fault. Joey is slow. All Joey. Thank you, Ron. We want you back, says Nicholas. At least one person says in here that they want you back. You all think right. Glenn was given stimulus? Listen, I ain't got no stimulus. I ain't got nothing. I don't know. I'm in that bracket. They ain't give me jack. So that sucks for me. Anyway. All right. So, thank you for the information, says Ibrahima. All right. Still no? All right. So Joey's going to get... I know Joey makes it all possible, says Roger. I know. He's figuring out right now. Cafe Bustelo. You know, I didn't have any Cafe Bustelo today. I got some old Cafe Bustelo in the cup. You don't want to see that, do you? Yeah, you don't like that. I don't want to show that. All right. Mark says, welcome back, Joey. His performance was meh on Thursday without you. That's messed up, Mark. That is so messed up. That's funny, though, but that was messed up. All right. Sednet says we want you back as well. And so we're getting ready to get our winner right about now. John on Facebook says, yes, come back. So that's a good thing. We need to get you to come back. I think once a month would be an awesome thing to have you here. I'm really thinking that once a month would be, and you guys can bring your options questions, and which is nothing like espresso. That's right, not espresso, Cafe Bustelo. You spelled Cafe Bustelo wrong, Nicholas. That's what you did. You spelled it wrong. Paycheck, I love you, Clay. I missed your live show. I love, who's Clay? What Clay, says Matt?
Julie Pickard.
Julie Pickard. That is the winner of the options Paycheck course. Julie, you here? Julie? Isn't it Julie or Pickard? I can't read. Where did you put it? Oh, Julie Pickard. All right, there it is. Julie, are you here? Sigh. Did she say "oh wow" a second ago?
Yep.
All right, so Julie, you need to send an email to, there you are. I saw her. Stop. Fabulous. I'll email you. Yes, I'm here. All right. You need to send an email to connect@VectorVest.com. Connect@VectorVest.com. Congratulations. Absolutely. Love you, Clay. What is Clay? Who's talk about? All right. With that, folks, we're done. We're wrapping this up. Thank you guys for being here. Remember, there's a link in the chat for you to get the 5-step checklist to generate an extra 3% per month. That's for everybody out there. All of you get that. All of you get that. All right. The 5-step checklist to generate an extra 3% per month in income safely using options. All right. Fernando says, I never win. Well, at least I said your name, Fernando, so you're a winner for that. Yeah. All right. So it is what it is. All right. So with that, Ron, have a great day, my friend.
Thank you.
For the rest of you, thank you all for being here for this special presentation on our live YouTube channel. Remember, hit the bell icon so that when things like this come up, you get the alert. Facebook folks, thank you so much for joining in as well and being able to see your chat along with the YouTube chat was amazing. I think having the dual stream was awesome. All right, with that, folks, adios, arrivederci, ciao, au revoir, sayonara, aloha to all my peeps in Hawaii. Assalam, shalom, namaste. For all my Greek friends, yasu, see ya.